Hello and welcome to a fresh new edition of Bazaar Morning Call. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi.
Hi,
good morning.
Welcome back.
Thank you. Thanks, Nigel. I mean, so while I was away, we hit 18,000.
Yes.
And I believe, Sonia, you were not there yesterday as well. So Nigel was the representative on the show.
Did you do the Bhangra yesterday?
No. Sonia, that I left for you.
So,
We'll wait for Sanjeev Bhasin for that, right?
well, 18,000 it is. We're there. And which means, by the way, that we're only, 3% away from all-time highs. 18,604, which was the high made in October of 2021. Just very briefly, 18,000 yesterday, comfortably, very strong breakout, very strong momentum. We'll talk more about that in terms of what this means from here. Overnight, you have some subdued cues. So US equities are lower, Nasdaq is down 1%, yields are slightly higher. But I would say, I mean, don't read too much into this. This is month-end repositioning, which was the main driver, not very much else. There wasn't very much else going on in any case. The big drivers lie in front of us, which is, of course, the Federal Reserve meeting that is tomorrow night and more stuff, jobs data later on Friday. So last night's data, I would say, I mean, you should sort of treat it with a bit of pinch of salt and look at the SGX. I think that's what's happening. We're up 115 odd points at this point in time, an hour before markets start to trade. 18,176, indicating the momentum maybe continues for a bit longer. Guys, hi.
Absolutely. I mean, it's just a matter of when, right? And not if the market hits new highs. 52-week highs as well, just 2% away. So if we are not doing Bhangra, I'm sure the traders are, investors are definitely rejoicing. Because not only has the Nifty conquered 18,000 yesterday, but it's been 3 straight days of gains, and now it's a 7-month high that the market is sitting on. The cues look very positive and favorable for the market. There was large buying from FIIs yesterday. Over 4,100 crores was the money that was pumped in by FIIs, while DIs pulled out about less than 1,200 crores. Strong earnings from a lot of large caps. This earnings season has been pretty good. By and large, 90% of large caps have done well. Yesterday, L&T reported a very strong order inflow. A 23% year-on-year growth at the group level is what L&T saw in terms of an order inflow. Bharti's numbers were a big beat, and that stock in any case has been at a record high. The US markets overnight were not that good, but give and take everything in the month of October, it's been a 14% gain that the Dow has seen. So even the US markets have come back after a weak preceding month. All eyes, of course, will be on the Fed Reserve's, FOMC meeting, and a 75 basis points rate hike has been priced in already by the markets. But there are a lot of other data points that we are expecting, whether it's the job opening, the construction spending, ISM manufacturing. So it's a data-heavy week. But give and take everything, I think this market, is firmly in the grip of the bulls. At least that's the trend that we've seen over the last many days.
Sonia, absolutely. And I think, I was looking at the change. It seems because you're above the psychologically important 18,000 market, it looks like the market's done a lot. But, I was last on air on the evening of Diwali. From that point on, the Nifty is up just 1.5%. Yeah. That's it. The mental makeup changes. You're above 18,000. You're back above pivotal level, and you're very close to all-time highs. So I think that is essentially important, not the numbers themselves, which are not. The market has consolidated a long time, 17,500, 17,800, and finally we've got this push higher. Let's see if it can sustain. Let me just quickly outline. So the Nasdaq was down 1% last night. You've got the 10-year, which actually moved up a little bit. But a lot of this I would attribute to the month-end positioning, repositioning, whatever you want to call it. So don't read too much into it. There is the Fed decision tomorrow night. And then there is the US jobs data on Friday. A 75 basis point Fed hike is priced in by the markets. That is for November. That is tomorrow night. We will react to this on Thursday morning. So that won't be a surprise. What the markets are expecting is that accompanying the 75 basis point hike, the Fed will indicate a downshift in terms of the pace of increases. We've heard various Fed officials say that it's not necessary that every meeting we see a 75 basis point hike. In December, which is the next meeting after tomorrow, you may get a 50 basis point hike. So, the debate is whether the Fed will actually indicate that in its commentary tomorrow. And I think that's fairly, if it happens in a meaningful way, it's significant. It's significant for the markets as well. We've seen what happened in Europe, the ECB. I mean, there was the initial read was that the ECB is slightly dovish. We saw a big fall in yields. We've seen other central banks, etc., indicate and markets reacting very strongly. The only thing is that the markets in the US are maybe already pricing some of this downshift in. The S&P 500, by the way, is up 11%. The Nasdaq is up almost 10% in the last 12 sessions. This is from the 13th of October. 13th of October, by the way, is when you had that big shocker of an inflation number, CPI number in the US. From the low of the 13th of October, the S&P and the Nasdaq are up 10 and 11% respectively. So the downshift will matter. The commentary will matter, but some of it may be in the price. I mean, if you're looking for a big, roaring risk-on rally, immediately, you'd probably have to wait a little bit because the market's done quite a bit. The Nifty here closed above the 18,000 level. As I said, it's pivotal. It kind of sort of, in a way, changes the mental makeup that you're very close to all-time highs. By the way, it should be no surprise, right? I mean, all this year we've been talking about how the Nifty has been the strongest market in the world, strongest large market in the world, has consistently been at the #1 position in terms of returns year to date. And so it should be natural that we are, closest to our all-time highs, the first as well. 1/3 of the gains yesterday, I was just looking at the Nifty constituents, came from the HDFC Twins, Bank, HDFC Limited and Reliance Industries. A small cap index was flat to slightly lower, actually. Mid caps were higher, but large caps essentially is where most of the gains came from. Supports for the Nifty come in at around 17,850 levels. And on the way up, there is this upward sloping channel on the Nifty, which basically gets you targets at about 18,100 to about 18,300. So I think the first stop at about 18,100 and then beyond that 18,300. But I think, 3% away, all-time highs. That is the real kind of marker that you want to watch out for as we start another session on a pretty strong footing according to the SGX Nifty. Nigel, what are you watching?
Well, for me, the Fed meet stands between the Nifty and the fresh all-time highs. And yesterday was a cracker of the session. Nifty went ahead. They conquered that 18,000 odd mark. And on a day-to-day basis, the last 4 sessions odd, we had a gap up. That gap up gets sold into. Yesterday, we broke that jinx. The Nifty ended at the high point of the day. And domestic-facing themes, they did well. Whether you're looking at cement, Ultratech Cement, Dalmia Bharat, you had, autos as well did do well. That Mahindra & Mahindra was up. At the end of the day, you had a pleasant surprise coming from the FIs, and it appeared that this was genuine buying. Big buying number coming in there, and the HDFC Twins as well came back in style. Remember, yesterday, both the pillars did well. The Nifty Bank, that was up 0.8%, while the IT index was up 1.5% odd. But the Nifty is only 3% away now from fresh all-time highs. And the HDFC Twins, they have actually been lagging. If they want to get closer to those 52-week highs, then the Nifty is definitely going to be getting there, sooner than expected. So the HDFC Twins, they hold the key. What are the FIs doing in the F&O market? Well, yesterday, we made this point in the morning. They're adding shorts. It's not such a bad thing. Yesterday, they were forced to cover those shorts. So they covered 10,000 contracts on the short side, and they added some longs as well. And they backed that up with writing some puts, which for me is a big positive. When they write puts, I like that very much. And they're buying some puts as well in case things go wrong. What were they writing? Yesterday it appeared 17,800 put, 17,900 as well as the 18,000 put. Between the three, there were close to around 75 to 80 lakh shares added. So now, in fact, the support for the Nifty, that we were talking about 17,500 because of 50 DMAs out there, going by the options data, it seems to have moved up to around 17,750 odd. Just a quick word on the currency space. Towards the end of trade, I don't know whether we have an intraday chart of the rupee, but it did see some weakness, though it didn't disrupt the equity markets yesterday. Today, the dollar index is back at around 111.5 odd. So just keep an eye out on the rupee. It seems traders are okay with the rupee being sub 83 odd. So that could be another spot to bother. And only the Fed could stand now, the Fed meet and the comedy that comes out there between the Nifty and fresh all-time highs. Otherwise, November, in all likelihood, we could get that. And the SGX Nifty is saying we do another 100 points at gap up. So buy the dips. My guesses will continue.
Oh, absolutely. Deep shade of green this morning, right? And as you were talking about auto stocks, today is an important day because all the auto sales numbers come out. And once again, it's going to be a K-shaped recovery for the auto sector. So on one hand, the premium side of the market with its premium cars, bikes, SUVs have done very well. So your Marutis, M&Ms, Eicher Motors of the world continue to do very well. But on the flip side, the rural market, the entry-level segment is under pressure. So, names like Hero MotoCorp could continue to disappoint. So those are a couple of stocks that I'm watching. Maruti, M&M, Leyland could report good numbers, while on the weaker side, it's Hero MotoCorp that could be under pressure. A lot of earnings to watch. Today, you have the likes of Sun Pharma, there's Tech Mahindra, there's Nykaa, Lodha. So a lot of these non-index large caps as well that could report their will report their numbers. On Friday, there's Titan. On Saturday, there's SBI. So I'll keep an eye out on all of these stocks. And of course, L&T will be reacting to not just a good set of numbers, but confidence from the management on maintaining their FY23 guidance. So we'll talk about all of that and more in the next 1 hour. We have lots of cues coming through. First up, we have a comment from Pankaj Acharya of Antique, who says that the key monitorable now is the size of the rate hike in the US and the Fed's overall commentary in the upcoming monetary policy meet. He believes that the market may remain sideways in the near term with heightened volatility. He says their March 2023 Nifty target stands at 18,000 because of an increased recession risk in advanced economies. He also says that the US and Eurozone recession probability over the next 1 year has increased in the last 1 month from 50 to 60%. And overall, he says they continue to prefer large caps and domestic cyclicals.
Well, let's get you some money market views as well. Bhaskar Panda of HDFC Bank says that the dollar index gained ahead of the FOMC decision on rate hikes and oil cooled off a bit. In Asia, he says Bank of Japan data showed that they have spent about $45 billion to defend the yen. In India, his view is the dollar-rupee pair responded to these global factors as the INR depreciated mildly against the dollar yesterday, and the after effects are expected to last today as well. He expects the dollar-rupee pair to trade in a range of between 82.65 to 82.8 for the day.
Okay, let's also get a quick comment on the bonds then. Bhaskar Panda says the Indian bond traders are still trying to figure out the early MPC meeting this week against an uncertain global backdrop. He says lower oil prices could help, and he expects the 10-year benchmark bond yield to trade in a broad range of 7.4 to 7.5%.
Well, we have a lot of stock-specific action today as well to track, and we'll get to that in just a bit in our top 10 segment. We're looking at Bharti Airtel, L&T, Axis Bank, TCI Express, Equitas, Small Finance Bank, LT Foods and Timken India. Their stocks are on our radar on the back of positive news flow. While we also have Tata Steel, Castrol and Moil, they are stocks that could react to negative news flow.